Good morning, everyone, and welcome to the Chaarat Gold Holdings Investor and Analyst presentation on our 2021 Bankable Feasibility Study update on our Tulkubash asset in the Kyrgyz Republic. As always, a few technical aspects before we start the presentation. At any time, you can type a question in the Q&A section on your screen. Alternatively, you can click the raise hand button on your screen and we'll be able to ask a question live in the Q&A session after the presentation. This webcast is being recorded and will be available on the Chaarat website later today. I would now like to hand over to our CEO and board member, Artem Volynets, for the first part of the presentation.
Thank you very much, Patrick. Together presenting with me today, Darren Cooper, our Chief Operating Officer, and Chris Iga, our Chief Financial Officer. We are pleased to present the bankable feasibility study for Tulkubash project, which is a milestone in our path to building a 500,000 ounces production company from the set of existing assets. Patrick, next page, please. And we continue to execute on the milestones we set ourselves. And this is very much a logical and required step in order to complete the debt funding for Tulkubash project and start full-scale construction. Maybe I'll move to the executive summary. Thank you, Patrick. Just to address up front the recent events in Kyrgyz Republic in regards to Kumta mine and the standoff between Centera and the Kyrgyz government is an isolated event. We remain fully committed to the jurisdiction. We believe that Kyrgyz Republic is a good investment destination. No other mining operation in the country, no other foreign investor in the country is affected by the what is one-off and isolated issue between Centera and Kyrgyz Republic. And we certainly believe that the wider investment community will soon recognize that this is one-off event and all other foreign investors and other mining operations in the country are not affected. Therefore, we are moving full speed ahead with securing the required debt funding to start full-scale construction of Tulkubash project, which is the first phase of our bigger development in the Kyrgyz Republic, which will be then followed up by Kuzultash development. The BFS, which we published yesterday, is a required step to get to complete the debt funding. It is as required by debt funding providers a more robust study and has been independently verified to confirm its bankability and financeability. A more conservative approach to reserves and resources and additional drilling done last year has increased resources. Reserves has been decreased, but we expect them to move back into and move to resources. We expect them to move into reserves following the drilling this year. The BFS presents a very financially attractive project with $85 million NPV and substantial cash flow generation that easily allows the debt to be repaid back within 2 years. So this paves a way for completion of the debt funding, which we still target to sign before second half of this year. I will pass over now to Darren for the detailed description of the BFS project highlights. Thank you.
Darren, you're on mute.
Sorry about that. The the words of 2020 for sure. You're on mute. So as Archer mentioned, our project BFS continues to show a good financially attractive project with upside potential. We have 1,177 ounces in resource, a reserve of 571, mine life still of 5 years. Recovery has improved since the original BFS, and now at 73.6. And that's as a result of us spending a lot more time actually understanding and doing more test work and understanding the basics, which is driving the recovery on the deposit. So that's a good positive for us also. Annual production, just less than 100,000 ounces. Capital has increased slightly to 115. 3 million of that is actually sustaining capital that is being brought forward on the heap leach facility. We're making a larger heap leach facility and building in expansion capacity on that and doing that at the beginning, which is just the easiest and safest and most environmentally protective way of doing it rather than doing it later. So effectively, the only capital increase on this project is around 2 million, which is related to some camp changes that we've made and changes to our mobile fleet maintenance facility. AISC has gone up slightly. The main reason for that is the drop in the ounces. As I mentioned, the overall capital cost and operating costs are basically unchanged. We have seen some improvements to our operating cost as a result of optimization of pit roads and pits themselves. So that's the primary reason for that. As Archer mentioned, resource and reserve is one of the key changes on our latest BFS, and I'll go in more detail on that in the next couple of slides. So on the resource model, we made a decision in 2020 to look at the resource model, how it had been developed, and recognize that there was some areas where we probably needed to optimize that resource a little bit. We have tightened the drill spacing, and we have come back to what would be sort of classified as more sort of industry standard spacings for our drilling, which is why you'll see that some of the measured has dropped down, indicated has increased, and inferred has increased quite significantly as a result of this. It's not a change in the deposit, it's just a change in the way that we have modeled the resource. The metal is still in the ground. Now we just need to be able to do some more drilling in 2020 to be able to bring those ounces back into the M&I category. And that will be the focus, which I'll talk about in just a couple of the upcoming slides. The key areas that have changed here is around what was classified as the old, mid, and the east pit. We had 3 areas that we would be mining: the main pit, and then moving off to the northeast, the mid and the east areas. It's in the mid and the east where we had sort of interpolated a little bit more positively maybe than the market and the sort of the industry standard would accept. It's not that what had happened in the past was wrong. It's very much still our belief that those ounces and those tons are there, and we know they are. It's just that because we've known this deposit, we've worked this deposit for so long, our geologists, they were very confident in how they was interpolating and moving forward on those ounces. We've now just decided, as has been mentioned, to take a much more conservative approach on this, but with the drilling that we will do next, or this year, we will get those ounces back quite quickly. If you move to the next slide, please, Patrick. So this just graphically shows the areas that we're talking about. The top slide shows the 2019 resource and reserve and the mine pits, and then 2021 down below. You can see that the main pit, which is classified as MZ pit, effectively unchanged. This is where we've done a lot of historical drilling. In fact, in 2019 and 2020, those were the main areas that we focused on to make sure that we had a good, solid, robust resource. The other areas, because they were down strike and we have a very good understanding of the actual sort of geological aspects of this, they were not as densely drilled, and those are the ones which have effectively dropped out. But those are the areas that we will be targeting in 2021 to be able to bring back in. Those ounces, they haven't gone anywhere necessarily. They're now in the inferred category. Some are not categorized, but we know that by increasing our drilling in those areas, we'll be able to bring that material back into M&I and flow through into the reserve as well. And that is one of our key areas for targeting in our 2021 drilling. So With regards to the 2021 program, we have a couple of key areas that we're going to be focusing in on. The first one is infill drilling, which will focus around mid and east. That's just to tighten up the drill spacing and be able to get that confidence to move those ounces back into M&I. We will then be doing step-out drilling, and that is designed around the Chaarat and Ishikuldi areas. This is to extend the mine life even further. The drilling that we're doing in mid and east will bring back those resources into the reserve and immediately have an impact on our mine life. And then Ishikuldi and Chaarat is about looking at the broader and longer term mine life expansion for the Tulkabash deposit. So those are the two key areas of drilling that we're going to be doing this year around increasing the resource in the reserve. The other key aspect that we will be doing this year, which we've talked about in previous updates, is around Kızıltaş. We have around about 1,500 meters that we're targeting in Kızıltaş to be able to do core drilling for further met testing. We're in the process right now of just identifying the provider of that metallurgical testing for us so that we can get the most robust results and the best understanding of what technology to use going forward. So those are the key areas that we're going to be focusing in on for this particular drill season. Drilling season has just started. We've just got the contractors to site. The roads have been cleared of snow. Access into camp was obtained this week. And we should be starting off our drilling campaign on all of these areas starting from next week. So that's our key focus. Mid, east, getting back those ounces which have been moved because of the categorization, extending outwards to further expand the life into the Chaarat and Ishikuldi regions, and then really nailing down the metallurgical options for Kızıltaş. So that's our 2021 focus. With regards to the capital expenditure, as I mentioned earlier, 110 to 115 is the headline, but the key there is 3 million of that is actually brought forward from deferred capital. It was an expansion that we were going to do at a later date. We've now brought that forward for 3 million. Gives us a much more robust design and expansion capacity for the heap leach facility. And then a further 2 million just to be able to do better maintenance and really provide the best-in-class facilities to be able to maintain the trucks and the operability of the mine going forward. We have optimized the pit designs and haul roads. That's work that we've been doing over the course of the last 12 months, is really working with the topography and thinking about the best ways to be able to optimize those designs. And that has resulted in some lower CapEx and OpEx for us. The key here around the timing going forward is because of the weather in the region, we are able to do some construction work on a continuous 12-month basis. There are some things which are best done only during the summer construction season. Roads we can do on a regular basis, but actually putting in the concrete for the crushing circuits, best done in the summertime, and also around the heap leach facility, being able to build that, get the liners down, and build that in the most robust manner. That's where we require those 2 full summer seasons effectively to be able to get completion. So unfortunately, the first gold has now moved out to early H2 2023. Exact timing of that obviously dependent upon exactly when we get our project financing in place. But that in essence is the update around the BFS. Robust, still very good financially and economically, especially at these gold prices. The gold is still in ground. We know it's there. We've just got to do the work to be able to bring that back into the resource and the reserves and get the mine life extended again. So with that, I will pass over to Chris just to talk about the financing. Just quickly before I do, a couple of pictures showing work which has been ongoing over the last sort of year, 18 months. We've built bridges over the rivers, full construction so that they don't get affected by any washouts or other issues. The bottom left-hand picture is the actual pad that we will be building the main camp on. So fully built and ready to roll. All the equipment that we had on site, still on site, ready to operate. And our Turkish contractors, Pamir, are ready to mobilize as soon as is necessary to be able to start up that construction work again. And we've put in place some of the modules which will move to the permanent facility later, but we'll just put those down into our normal camp area just for convenience for the time being, but they will go leftwards onto the big pad at a later date. Okay, Over to you, Chris.
Thanks, Darren. I appreciate it. So maybe Patrick on the first slide. So look, I'm sure you've seen these numbers, but a summary of some of the key financial results of the BFS are highlighted. Again, provides a robust project, ultimately with an IRR post-tax of 25%. And this is also based off of the short mine life of 5 years. So obviously that number increases quite dramatically as we'll extend the mine life through the drilling that Darren explained earlier on in his slides. So some of the other key numbers is the average gold production over actually the 6 years is 95,000 ounces, and we'll see that in the next couple of pages within the A6 at 866, which is higher than the original BFS, which is around 801 as a result of the lower ounces, as Darren mentioned before. But we've also added on the bottom part of the page the sensitivities, just so you appreciate how the metrics increase basis a higher spot price or gold price closer to spot. And look, as we look at the market environment today, we use I think a conservative price of 1450 in the BFS, but obviously we're looking at the models off a number of different price points, and obviously provides the right economics for our shareholders and future stakeholders. Maybe just moving to the next page, please. So diving into the details, this BFS will be on our website or is on our website now, and so these numbers are all based off of the BFS that's on the website. So obviously a very comprehensive document, but we provided a summary of the cash flows of the project. I think what's key is, as I said before, the production provides 95,000 ounces of gold. And then with the cash flows that you see at the very bottom of the page, we're able to repay back an 80 million plus or minus debt facility in the first couple of years of the project. And this is all being done at 1450. When you run the cash flows at 1850 or spot prices, the average numbers also go up. But when we're hitting around 100,000 ounces of gold per year, the free cash flow after tax is north of $100 million per year. So again, $100 million per year is a very attractive project that we have strong confidence that we'll be able to maintain once we are able to complete the exploration programs for this year and into the future. We still believe that this is a project that will have 10 plus years of mine life, if not longer. And so obviously the key for us is to get the project built and operating. So on that point, maybe going into the next slide, wanted to provide a bit of color as to where we stand with the project finance providers. They have seen a draft of this BFS, and so obviously we've been working with a number of different financing sources in getting them to the finish line with regards to launching a project financing facility. They are, I would say, an advanced, call it technical and legal DD, nearing completion in the next coming week or weeks. I mean, very close to the finalization. The BFS has been independently signed off. And so really what we're at the phase right now is just completing the documentation side of things. And unfortunately, monitoring the situation in the Carriers Republic with regards to potential impact on investor demand. If it was not for this, we would probably launched in the coming days, to be honest. But with the situation in country, it may make sense to just continue to monitor, let the dust settle, let the market understand too that this is very much a situation between the Carriers Republic and Centerra, and has no impact on our business whatsoever. And I think as Artem highlighted, the government remains very supportive of our business and our ambitions to build not only Tokabash, but eventually Kiziltash in the country. When we think about the sources and uses for the project, again, the CapEx requirement is $115 million. We're envisioning that roughly $80 million will be through a debt capacity for funding, and the remaining $35 million will come in equity. We successfully raised cash in February of close to $30 million of fresh cash. The bulk of that cash will be used to build the project, but additionally, we have obviously a joint venture agreement with Shiftai, and the Shiftai equity portion of that joint venture agreement will fund the remaining capital. So again, the equity is in place to start the construction. The BFS is not completed, so really what's missing is just finalization of documentation with the project finance providers, and then launching of the financing facility. Just the last note is we are exploring a couple different financing structures. There's traditional project financings, which is standalone, what I call Tulkabash financing. But you may have seen in the press release that another financing facility that we are exploring would be a financing facility that would not only fund Tulkabash, but also refinance all of our existing debts and effectively create one clean capital structure that would get repaid back over time once Tulkabash is put into production. This type of financing structure is more akin to a high yield bond, but again, it's being thought about. It could be the preferred option, but we'll make further announcements on which financing structure we end up proceeding with in the near future once we launch the project financing, again subject to market conditions. So with that, I'll turn it back over to Artem for some concluding remarks.
Thank you, Chris. So we are executing on the milestones which we set for the company a while back. Now that the required updated bankable feasibility study is done, the next step is completion of the project financing, which, as Chris explained in details, we're working on. At the same time, we're working on other assets. We started exploration at Kapan to bring into production ore from the east flank, and this is in progress. This year, as Darren mentioned already, we will be doing drilling at Kızıltaş to get fresh ore samples to do the test work. And as a part of the financing for Kızıltaş, we're considering complete refinancing, as Chris mentioned already. So very steadily executing on the milestones set for the company, moving forward with full speed, and building the eventual production of close to 500,000 ounces from the 3 assets that we have, and M&A will be on top of that. Thank you very much for your time this morning. Happy to take any questions that you may have.
Thank you very much, Artem and Darren and Chris, for the presentation. Yeah, we're just entering the Q&A section. One more time, you can type questions in the Q&A section on your screen, or you can also use the raise hand button in order to ask a question directly live to the panelists. So I'm going to open it up with the first question that we received. It's about the current status of the construction. It's maybe a question to Darren with regards to the drilling equipment and the construction equipment. What is currently happening on site?
As I mentioned earlier, we have mobilized. We have our geology team actually leaving on Friday of this week. They will be heading to site. The short road is now open, so it's only taking about 11 hours to get to site compared to what it takes during the winter time. So they will be on their way. Drillers are already there. Equipment is effectively there, or just being parked into the right positions. So we'll be starting pads, construction, trenching initially, drilling works, and getting all of the metallurgical testing of that stuff done as quickly as possible. So that's the key activities which will be occurring. We also have obviously all of the mobile equipment still available, and as funding permits, we are able to ramp up on the construction works very quickly. And yeah, so that's pretty much where we are. Everything is now full steam ahead, as Archie mentioned. We are ready to roll.
Thank you very much, Darren. The next question I received was a pre-submitted question. Maybe Artem, you can comment. Given Chaarat's expertise, good reputation within the country, and the previous offer for Centerra Gold, do they currently see an opportunity to re-engage with Centerra, perhaps with the support of the Kyrgyz government?
Thank you. Our focus in the country is to build the Tulkabash project and then move on to Kızıltaş project. Once both of those assets are in production, we will be producing almost as much gold as Kumta, with a much longer mine life. So this is our focus, have 100% of our time in Kyrgyz Republic, and we are not going to intervene in any shape or form on a dialogue between the Kyrgyz government and Centera. This is for these two parties to debate.
Thanks, Artem. One question just came in for Chris. Can you confirm that convertibles be avoided if you follow the alternative funding option for the company, please? So I guess what he means is if we focus on a corporate facility, if the convertibles are taken care of.
Yes, that's obviously correct. So the option that we're looking at is a larger financing facility that would refinance the two existing facilities that we have in place today. One is the convertible bonds, and the second is a loan at the Kapan level with three banks, which is amortized on a quarterly basis. So we'd be looking at a comprehensive refinancing of those two, plus putting in fresh cash to build the Tokodash project. So this could be a very elegant solution to the business. Again, pending what we.
Thanks very much, Chris. One question came in for Darren just now. The updated 73.6% recovery for gold, is that gold equivalent? You can answer that quickly. And the second part of the question was if you can give specifics on the test work behind that for the increased recovery.
Yes, this is gold, not gold equivalent. So the Tokobash project has primarily gold, and that is where the majority of the value is coming from. There is also silver, obviously, in the deposit also, but that's to a much lesser extent. So this is only for the gold. The work that's happened in the last couple of years, which wasn't in the previous BFS, we have a lot more test results, bottle roll tests, which were carried out using SAEL, the country laboratory. And that's enabled us to really think about what is driving the recovery within the deposit. When the initial test work was done, when some of the initial column testing was done, I would say that it wasn't fully understood around the sort of the matrix of the host rock versus the fracturing where the gold occurs. So you can take the average assay of the material and you'll still get mineralization and other metals and other sulfides which are in the host rock, giving a higher sulfide level compared to what's actually in the fractures where the gold is, which we're trying to leach. And that's what this test work has been able to really help us develop and understand better is how that mechanism works. So we've done a lot of work in the last couple of years on the bottle roll tests, tied that back to the column leach tests, and by actually looking at the material and coding all of the material which has been drilled in the past by oxidation state, that gives us a much better understanding of what's driving that recovery model. And that's what you'll see reflected in the latest BFS.
Thanks very much, Darren. I think we maybe have one more question and then we conclude the webcast. Just one general question that I received was, what's the management view on the BFS result? And basically, that's a key milestone, but what's basically, driving the conservatism? So maybe Darren or Artem, either of you can comment.
Yeah, I'll provide the overall comment. Management is pleased with the BFS results because this is a required milestone in order to complete the debt funding for the project. BFS confirms the robustness of the project and underlines that it's highly financially attractive, which is exactly what we need to complete the debt funding.
Yeah, with that, I think we conclude the meeting. Thanks everyone for participating in this morning's call, and have a good day. Thank you very much.
Thank you.
Thank you. Bye.